From the morning reading, the Qs bounce up from support as IWM, diamonds, and spiders pause. Nvidia resumes uptrend. Apple bounces. 3 of 10 sectors moved higher on Wednesday. XLK, XLY, and XLP were the strongest sectors, while XLF was the weakest sector. Oil futures were down 42 cents to close at 45.33. Breadth strengthened compared to the prior session as advancers led 1591 to 1454 on the New York Stock Exchange and led 1451 to 1322 on the Nasdaq. On the S&P 500 snapshot, a modest decline. The S&P 500 opened lower and traded in a narrow range between its negative 0.05% morning high and its negative 0.38% lunch hour low. In fact, the intraday range was the third smallest of the 222 market days so far in 2016. The index closed the session with a modest 0.16% decline. The yield on the 10-year note fell 1 basis point to 2.22%, well off its 2.28% intraday high. Financial stocks have rallied despite worsening conditions. The S&P 500 financial sector has rallied hard over the past week, while a Goldman Sachs index of financial conditions has worsened. The two typically move almost in lockstep, so this is a rare divergence. Similar situations have led to some weakness in financial stocks over the shorter term. ETF traders have made a big shift in the S&P 500. Funds that bet on a higher S&P have added nearly 10% to their asset base, while inverse funds that bet on a lower market have lost nearly 15% of their asset base. That's a huge bear to bull shift for these funds, last seen near the near-term, short-term peak of 2014. Small caps are on fire. The Russell 2000 has rallied for the 9th straight day, adding more than 12% and closing at a new all-time high. Among the other 9-day pushes to an all-time high, this one ranks as the largest gain by a factor of 2. That might have used up a lot of buying interest, though the others did show limited upside momentum over the next couple of weeks. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:12 a.m. Mountain Time, and I'm recording this in preparation for the market day of November the 17th, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's go ahead and get into the morning report. So at the time of this cut, the 4 U.S. broad-based indices were a bit mixed and relatively unchanged. S&P futures up just above scratch. The Dow futures were down just below scratch, and the Russell and Nasdaq futures were up about 0.25%. And other action, crude oil was up big, 2.85%. Euro was up about 0.33%. Bonds down just below scratch, and gold up about 0.33%. China is up just above scratch. Hong Kong down just below scratch, Japan on scratch, Germany down about 0.25%, and United Kingdom up about 0.25%. And U.S. macroeconomic reports of note for today, we have building permits, CPI, Philly Fed manufacturing, weekly unemployment claims, housing starts, natural gas storage, and Fed Chair Yellen speaking. In terms of looking forward to tomorrow, we have FOMC member Bullard speaking, and FOMC member speaks. I should say FOMC member George speaking. And that looks to be about it. In terms of current volatility conditions, as you would expect, these continue to fall. Short-term VIX now down below a 10, 9.52. Skew also benign. IV percentiles very, very low. pretty much all below the lower quartile. The IV percentile for the S&P is at 21, the Russell 24, the NASDAQ at 27, and the Dow at a 22. No standard deviation moves were put in yesterday on a close-to-close basis. Let's go ahead and bounce over to the graphs, the charts. Here's our S&P futures. And you see yesterday's action came up within just a handful of points of the all-time high, and then backed off the rest of the day. And today's action has been just a modest thrust to the upside, but then backing off, still slightly positive at the time of this viewing. So we continue to flirt with this area of resistance, but not yet break it. So we'll see just where that goes. We expect this resistance to hold until proven otherwise, especially given that it's had multiple touches and has failed each time. Now, one thing that can be said is that all these touches were made over the course of a couple, 3 weeks, some time ago, in fact, in August, and this is the first time back to revisit that area since August. So might be a little different this time, but still, the fact that the S&P has been kind of in this area now for over a week and not yet having gone through it, I think is somewhat telling. You have the Dow futures, of course, did break, but have run into something of an exhaustion pattern and seem to be going into a little bit of a consolidation at this point. Now, these may come back down and revisit the former resistance turn support and a bit of a retracement. We'll see if it comes back that far. And the Russell futures, very much the same kind of pattern as you have in the Dow. A little bit of an exhaustion pattern developing now, though you have to say that, exhaustion, while still incrementally climbing higher, and often bulls do just that. They go to lower volumes, smaller candles, and just kind of ebb up every little day a little bit kind of thing. So very bullish action here on the Russell, and certainly it has been the hero. You heard one of the morning authors mention 9 straight days in a row with up action and some 12%, and I suspect that they're not even counting this overnight wick. They're probably referring to the rut and a 12% move. You've gone from 1122 all the way to 1308, almost 200 points on the Russell. Russell normally doesn't move much more than the about 60 points without a retracement, and we are way beyond that norm. Of course, obviously, we had some unusual circumstances in here with the election evening activity. In terms of the NASDAQ, of course, has been in this sideways neutral pattern, and it's about as you could define neutral, about as neutral as you can get, smack in the middle of the cloud. Moving average lines are largely wrapped sideways, halfway between the top and the bottom of the range. So that's where we are. Though the NASDAQ has improved in the short term, the last few days, the intermediate term is absolutely locked in a neutral pattern. In other markets, of course, crude oil had a big overnight move, and ever since it came down and bounced off this 618 retracement area, has been moving up, and it has started to move up through some of the moving average lines up into the cloud, and it's also about halfway between the top and bottom of its current range. So while improving, much like the NASDAQ, still hasn't actually, in quotes, achieved anything in terms of new highs or new lows, basically locked in a sideways consolidation pattern, albeit a somewhat complex pattern. In terms of gold, gold has been very weak of late, and it's been in a sideways consolidation pattern near the lows. So little different contrast there. In fact, we'll go ahead and look at the dollar. As you've seen, the dollar came up and tickled the 52-week high. This is not the all-time highs. If you go back more years, you'll see the dollar has been higher. But certainly in recent history, this is quite high, and we're up against that resistance of that key swing area of nearly a year ago. in terms of the bonds, long bonds, much like gold, has been in a sideways pattern down near its lows and is in the general area of significant longer term support. So it'll be interesting to see just where bonds are able to go from here. It would appear bonds are in the big unwind and in near 100% anticipation of a December rate hike by the Fed. And then finally, volatility. And you see volatility has had the big crush, and we're down now in the 13 handle. So very much in the camp of kind of normal bull market volatility ranges, especially that 12 to 15 kind of area in that lower part of normal volatility. Okay, that's enough for the charts for today. Let's go ahead and go to the daily report. And some changes, but not a lot of changes from yesterday. Intermediate term phase opinion, still market phase 2, trend reversal. In terms of the 3 market timing signals, first one coming to us from IBD, confirmed uptrend, bullish. GMI index, a 5 out of 6 buy signal in place since 11:10, bullish. Decision point scoreboard coming to us from stock charts, 2 new signals on the intermediate term. And we talked yesterday that it was going to be very difficult to see the hedge warning status drop to a 0+ until this intermediate term kind of joined the parade of the short-term improvement that's been seen in recent sessions since the election. Well, we had 2 signals come into play yesterday, both related to the S&P, the 100 and the 500. So we now have a mixed signal on the intermediate, joining a mixed signal on the Dow with a neutral to bearish signal on the NASDAQ. This is all up against mixed signals on the long term as well. Right now, what we're looking for is for the NASDAQ to kind of get its act together and join the bullishness of the other indices, and for the rest of these intermediate term to resolve themselves to the bull side. So consensus on all this is a much improved market, and yet at the same time, one in which there's significant longer term time frames, intermediate to long term, lack of support for a normal bull market at this point. We'll see if these conditions continue to improve. Position sizing opinions on both the portfolio and the volatility active trader models are at 100%. Intermediate term market postures, severely strong bull, supported by a weak bullish sentiment line. And you see the S&P now at an 88.2. The Dow and the Russell also in the severely strong bull camp. NASDAQ also strong bull. In terms of hedge warning status, still remaining at level 1. Will probably remain at level 1 until we see those intermediate term time frame signals improve on the stock chart's decision point. In terms of the 3 strategy opinions, no changes from yesterday. Certainly acceptable to initiate new positions on all 3 of these strategies at this point, though suggesting relatively defensive type structures, recognizing that we are currently up against significant resistance on the big index, the S&P 500. In terms of the specific warning areas, you can see just about everything has resolved to its normal status, only the distribution day count on the NASDAQ being in a warning area. Trend-based also, everything is A-OK for the bulls. Intermarket risk aversion indicators, all okay for the bulls. Sentiment up in the greed area just barely at a 60. And you see sector-specific information. Yesterday, the big heroes were telecom, information tech, and consumer discretionary. And from a breadth standpoint, materials probably also had a reasonable day. Now, when we say telecom, remember, this is 2 companies. This is Verizon and AT&T. There's only 5 components to the entire telecom sector, so just keep that in mind and don't make too much of that big green bar up there at the top. It's 2 companies. And also kind of look at down here at the bottom, financials, energy, utilities. So several of the sectors that we've seen struggling of late are still down here. Real estate, healthcare, utilities, all down here in the lower half. Financials, of course, have been doing very, very well of late. A little bit of a retracement with yesterday's action with broad-based retraction. In terms of the market postures by sector, you can see everything's pretty much lined up as the sector rotation has recently been pointing. Consumer staples all down across all three time frames, utilities all down, and yet at the same time, the financials and some of the others, mostly risk-on kind of sectors, have greatly improved to where all three time frames are now with market postures to the bull side. A little bit of a retracement day yesterday. You can see the one-day red up against, for the most part, 5-day, 1 month, and kind of a mixed bag on the 3-month performance. And that's just what we have. When you're up against resistance, you're largely, lots of movement since August, and yet at the same time, until you actually start achieving something of a normal, healthy bull trend with higher highs and higher lows, it's hard to actually achieve anything. And unless you happen to be playing financials correctly, for the most part, your portfolio is probably even negative for the last 3-month period. So it's been one of those periods in which it's been difficult for long-term investors to kind of achieve anything. And that's been so much the story now for the last 2 years. We've made, during that 2-year period, a couple new incremental highs, but we spent much of the time back off of that without making a series of higher highs, and very, very, very slow progress in being able to achieve anything. So I think that's probably enough for today. Let's go ahead and wrap up. I will make one comment here. If you'd like to get emails from us, and we send out very few emails, but when we write a blog article, sometimes we give an alert when a hedge risk level changes. Well, the way you can receive that alert is to go to this website, roll down just a little bit, find this button, click on that button, put your first name, last name, and email address, and that's all it takes. You will, at that point, be on the distribution list to receive emails when we send those out in the future. You'll also, as a result of doing that, you'll get a hyperlink with a opportunity to download an ebook that I put together on portfolio strategy, so that might also be of some interest to you. If you like to do things through texting, you can use your smartphone to achieve the same thing. Just text Falcon Global, all one word, to the number 22828. 22828. And then I'm going to scroll through the rest of these slides. If you see something of interest, just hit the pause button and then get your additional details. Disclaimers, as always, hit the pause button if you need more time to review the disclaimers. Also note the hyperlink down here at the bottom for the full set of disclosures. We'll be back here for tomorrow's market preview session from Falcon Global. In the meantime, manage that trade risk, and you'll find that the consistency will greatly improve in your net lick line. In the meantime, also, each and every day, go out there and seek to learn something. In the meantime, good trading. We'll see you back here tomorrow.